Now for some stock picks during a volatile market. Let's get right to David Strzeski, CEO of Sound Planning Group. David, thanks so much for joining us.
It's good to be with you, Caroline.
I was trying to practice your last name, Strzeski, and I still screwed it up, so apologies for that. I hope I got it right that second time. But, our last guest was talking about the Fed and just wishes the Fed would take a breather already and just pause for a second. I think your take might be a little bit different because I was reading your notes. I'm finally happy the Federal Reserve gave us a serious dose of reality.
Well, thank you so much, and it's good to be with you. There's never been a bottom while the Fed has been hiking. And so that's an important point to note, is that I don't think that we're at a bottom. Obviously, the markets are down today. It's kind of crazy. But yeah, I'm glad that they got strong in what they were saying, because we've got some very serious things that are happening. The big challenge, though, is that the Fed only affects demand and not supply. And so there's only so much that they can do in the economy that we've been given. But yeah, higher expectations of inflation. We've got a housing market that's crashing now. That's really unfortunate. I mean, we're also unloading M2 here, the Fed balance sheet. And if you look at the stock market relative to the balance sheet going up, they almost move in unison with one another. And so that's very concerning for me. But we obviously need to get this infection of inflation under control.
So if we haven't hit a bottom yet, something tells me you think we aren't sticking above those June lows for the S&P 500. How much more downside could be in store?
Well, I have no clue. There's people that can talk about that and share very specific things. To see a 20% down would seem very reasonable. I just don't know if our economy today is the same as it was pre-2020. Because see, when we got all this PPP money, when we got all this extra cash and liquidity pumped into our system, the stock market got built up. The crypto markets got built up. The housing market went out of control. And now we're seeing those cool down very significantly. But we just pumped over $8 trillion into our system over the last 2 years, and we're already cooling off. So it could go a lot worse. I mean, you talk to people like Ray Dalio or Harry Dent, they're going to say minus 50% still. And so I don't know. The answer is probably somewhere in the middle. But the point is that we need to be able to ride bulls and tame bears, and portfolio selection is really important, especially given the season and time that you're in life.
So with that forecast, no surprise, I guess, that you're turning to metals for safety. I mean, gold is the classic flight to safety, although you haven't had a lot of company in that camp in terms of the gold camp. But tell us why you like GLD, the ETF.
Well, so GLD, if we look at it in relationship to the U.S. dollar, which is, of course, how we watch the price change, it's not been spectacular. And so I'm not surprised that many others of my peers are not are looking at this idea. But if you look at the U.S. dollar right now and how much it's strengthened over the last year, you'll find yourself saying, holy smokes, we're at a place right now where we begin to hurt the emerging markets and as well as our trade if we continue to keep this as high as it is. Also, I think that you've got a lot of conversations right now about how we're even trading oil. Russia and China are looking to do things, amongst themselves with India. There's some big challenges here for the U.S. dollar right now. So I wouldn't be surprised to see the U.S. dollar have some challenges or slip a little bit, and that we see gold really go up. But if you look at gold relative to the euro, as an example, well, gold has been a tremendous inflation hedge for that, because the euro's gone down, gold has essentially gone up with the U.S. dollar. And so I believe that there's a longer term play here. I like the metal miners more so than just holding GLD or SLV, because the miners are going to actually produce the gold or the silver. Additionally, they own the mines. And so if you've got good organizations that you can track with for a while, I think that that's a really important part of a portfolio selection here as we move into the future with higher inflation, et cetera, et cetera.
Okay, so moving away from the metals and speaking about specific companies here, you like Lockheed Martin, and this is a popular one so far this year, up 16% year to date. So if you're not already in, you would still get in?
I do think that, because as we just are looking at headlines right now, President Biden was just having conversations at the UN. This doesn't look like we're backing down anytime soon. In fact, it looks like it potentially could get a lot worse. And so Lockheed is just positioned really well as a contractor to be able to pick up a lot of the upside here. Additionally, China and Taiwan have been threatening back and forth here, and you don't want to see any of this stuff happen. But we have allies, we have organizations that can supply them with things, and so Lockheed Martin happens to be one of those.
All right, and have to leave it there. David Strzeski, CEO of Sound Planning Group. Hope I got it right. Thanks so much.
You nailed it. Thank you.
Coming up next, Hatem